Hello everyone, welcome to EduTap and welcome to the Finance 360-degree sessions. In today's session, we are going to discuss a very important topic, that is the Lok Sabha has passed the Banking Law Amendment Bill 2024. Now this Banking Law Amendment Bill is very important for your RBI Grade B, NABARD Grade A, SEBI Grade A examination from your objective point of view, from your descriptive point of view. So today we are going to have the clarity about this Banking Law Amendment Bill, what are the updates that have been proposed, which acts are being amended. So all of this we are going to discuss in today's session. So let's get started, but before that, do subscribe to the YouTube channel of EduTap and join our Telegram channel where you will get the PDF of the session, and the link for the Telegram channel is provided in the description box below. So coming to the topic, the Banking Law Amendment Bill 2024, this was announced by the Union Finance Minister Nirmala Sitharaman in her Union Budget speech of 2023-24. Now, see, the Banking Law Amendment Bill 2024, this was introduced in the Lok Sabha on August 9, 2024, and now this has been passed by the Lok Sabha in December 3, 2024. So you can understand that recently the Banking Law Amendment Bill 2024 has been passed by the Lok Sabha on December 3, 2024. So now, this Banking Law Amendment Bill 2024, it is actually amending, or it is actually proposing to amend these 5 very important acts. The RBI Act of 1934, the Banking Regulation Act of 1949, the State Bank of India Act of 1955, the Banking Companies Acquisition and Transfer of Undertakings Act of 1970, and the Banking Companies Acquisition and Transfer of Undertakings Act of 1980. So this bill is proposing to amend these 5 very important acts. So the Banking Law Amendment Bill 2024 proposes 19 amendments to the 5 existing acts for the ease of compliance, better regulation, efficient auditing of the banks, including multi-state cooperatives offering banking services. So this is what the Union Finance Minister Nirmala Sitharaman has said, that for the ease of compliance, better regulation, efficient auditing of the banks, there are the 19 amendments that have been brought in these 5 acts, or there are the 19 amendments that have been proposed in these 5 acts. Okay, so now what are the updates and what are the amendments that have been proposed, that we are going to understand. So let's start with the first one. So the tenure of directors of cooperative banks. So usually what happens, that as per the Banking Regulation Act, this prohibits the directors of a bank, except the chairman, except the whole-time directors, all the other directors. So except the chairman, except the whole-time director, all the other directors, they are prohibited to hold office for more than 8 years consecutively. That means all the other directors, they cannot hold office for more than 8 years consecutively. Now the bill proposes to increase this period to 10 years for cooperative banks. So the directors in the cooperative banks, they are proposed to hold the office for up to 10 years. So this is the proposal that is provided in the bill, to increase the period of holding the office to 10 years for cooperative banks, for the directors in the cooperative banks. Okay. Now coming to the second update, prohibition on common directors in case of cooperative banks. So the Banking Regulation Act prohibit a director of a bank board to serve on the board of another bank. So let's say Mr. XYZ is a director in the board of a bank. Now he cannot become the director in the board of another bank. That cannot happen. But there is an exemption that is provided, that this does not apply to directors appointed by RBI. That is, if the directors are appointed by RBI, then they are exempted from this rule. Now the bill extends this exemption to the director of a central cooperative bank. That means if Mr. XYZ or ABC is a director in a central cooperative bank, they can become the director in the board of state cooperative bank. So this is the extension of exemption that is proposed by the bill. So the bill extends this exemption to the director of a central cooperative bank, allowing a director of a central cooperative bank to serve as the director on the board of a state cooperative bank. So I hope this is clear. Now updates. Next is substantial interest in a company. So substantial interest means that you have a significant influence in the company. So under the Banking Regulation Act, substantial interest in a company refers to holding the shares of over 5 lakhs or 10% of the paid up capital of the company, whichever is less. So either you are holding 5 lakh rupees worth of shares, or you are holding 10% of the paid up capital of the company. So whichever is less. Let's say 5 lakh rupees is less. So if you are holding this much of the shares, that means you have a substantial interest in the company. Now this limit or this value was determined in 1968, and in 1968 the 5 lakh rupees was worth a lot, but due to inflation in the years, in the successive years, there was inflation, and now the value of 5 lakh rupees is not that much, right? So now it has been said that in 2024 there is the difference, like the 5 lakh rupees does not hold as much value in 2024 as it used to held in 1968. So it is said that there is the requirement of increasing this threshold. So the bill amends this, or the bill is proposing to amend this to increase the threshold to 2 crore rupees. So now it is proposed that the substantial interest in a company should refer to holding the shares of over 2 crore rupees or 10% of the paid up capital. So that is the idea. I hope this is clear, that before 5 lakh rupees was like if you have shares over 5 lakh rupees, it was considered substantial interest, but this was decided in 1968. But in 2024, 5 lakh rupees does not have that much value. So it is proposed to increase this threshold to 2 crore rupees. Okay, so that is the idea. Now next is remuneration of auditors. So at present the remuneration paid to the auditors of banks is fixed by the RBI in consultation with the central government. But the bill empowers, or the bill is proposing to empower the banks to decide the remuneration of their auditors. So the banks will have the power to decide the remuneration of their auditors. So this is the proposal of the bill, in the bill. So definition of fortnight for cash reserves. So under the RBI Act, scheduled banks must maintain a certain level of average daily balance with the RBI as cash reserves. So there is the cash reserves that the banks have to maintain with the Reserve Bank of India under the CRR, under the cash reserve ratio, that is currently 4.5%, right? So the RBI Act, under the RBI Act, scheduled banks must maintain a certain level of average daily balance of with the RBI as cash reserves. Okay, this average daily balance is based on the average of balances held by banks at the closing of the business of each day of a fortnight. So basically what happens that fortnight, till now under the RBI Act, the fortnight is defined as the period from Saturday to the second following Friday, including both days. So right now, if you see, 7th December is Saturday. Okay. Now 20th December is the second following Friday. 20th December is the second following Friday, and including both these days, it is considered the fortnight. So now the next fortnight will start from 21st December, that will be the Saturday, and the second following Friday will be 3rd January. So this is going to be the second fortnight. So the cash reserves were notified, or there was the regulatory reporting that used to happen on the last day of the fortnight. That was Friday, the second following Friday. So it was very complicated. Okay, so now the bill has proposed to change the definition of fortnight to the period from first day. So now it is proposed that the fortnight should be considered from first day to the 15th day of the month, and from the 16th day to the last day of each month, that is 30th or 31st or 28th in the case of February. So the bill changes the definition of fortnight of the period from 1st to 15th and from 16 to 30th or 31st. So this is the idea that the regulatory reporting deadlines proposed to the 15th. So the regulatory reporting will be happening on 15th and on the 30th of every month. So it will become easier for the banks to keep in mind that, okay, we have to, the reporting deadline is on 15th, or the reporting deadline is at the end of the month. So it will be more easier for the banks to remember and for the reporting deadlines to be met, because this was quite complicated and had to be like kept in mind. Okay, it also changes this definition under the Banking Regulation Act, where non-scheduled banks are required to maintain cash reserves. So this is the idea that under the RBI Act, there is the proposal of amendment that the fortnight definition should be changed, and the fortnight should be considered from 1st to 15th and from 16th to the last day of the month. So on 15th and on the last day of the month, there will be the reporting that will be happening for that particular fortnight. I hope this is very much clear. Okay. So this is the basic idea, that on the last day of the fortnight, there is the reporting that has to happen, and now the fortnight definition is proposed to be changed. So this is the idea. So regulatory reporting deadlines proposed to the 15th and the last day of every month, replacing the existing second and fourth Fridays. So it was a little complicated. Okay. Now, nomination. The Banking Regulation Act allows single or joint deposit holders to appoint a nominee. So till now you were appointing a nominee for your account. Like all the accounts that you have, I have like deposit account, let's say. So I was nominating my mother, or there was the nominee that I was selecting. Such a nominee can also be appointed for items left in custody of a bank or for a locker hired from the bank. The nominee can access the deposit articles or locker in case of the death of the person who nominated him or her. Okay. So in the case that the owner of the bank account, in the case the owner of the locker dies, the nominee will get the material, will get the money. So the bill allows the appointment up to 4 nominees to these purposes, for these purposes. So you see what happened during the COVID. The COVID was spreading in such a manner that the families were dying. Like a major part of the families were dying. 2 people, 3 people from the families, 4 people from the same family were dying. So it was considered in the bill that we have to increase the appointment up to 4 nominees, so that in such a scenario where the owner or where the account holder has died and the nominee has also, first nominee has also died, so in that case there should be second, third and fourth nominee that should be present, so that the money can go to the rightful owners, right? So for deposits, such nominees can be appointed either successively or simultaneously. See, successively means first nominee, second nominee, third nominee and fourth nominee. So first nominee, let's say, is my mother, second will be my brother, and so and so. Okay. So there are 4 nominees. That first, if something happens to this XYZ person, the mother gets the person. If something happens to the mother, like the second nominee will get the money. If something happens to the second nominee also, the money will go to the third nominee and so forth. So that is successfully. That the priority is given to the first, then if the first one is not present, the priority is given to the second, and so on. Now simultaneous. What is simultaneous? So see, if the XYZ person, that is the bank account holder, if he or she dies, then he has decided that there is simultaneous division of the money that will happen, that each one will get 25% each, or there is a predetermined percentage that is decided, that the first one will get 50% and the rest will get the rest of the amount. Okay. So for deposits, such nominees can be appointed either successfully or simultaneously, while for the other purposes they can be appointed successfully. Okay. So for deposits, remember that for deposits the nominees can be appointed either successively or simultaneously, while for the other purposes such as your locker, for the locker purposes, the nominees can only be appointed successfully. Okay. So in case of simultaneous nominees, the nomination will be effective in a declared proportion. So I have told you that if there is simultaneous nomination that is happening, so in the deposit account there is 5 lakh rupees. So it will be distributed among the people on the basis of the decided proportion. If the successive nomination is happening, the nominee who has been named higher in the order of the nomination will receive the priority. So in the successive one, you can understand that the first one will get the priority. Okay. If something happens to the first nominee, then the money will be given to the second nominee. Okay. So this point is very important, that for deposits there can be successive or simultaneous division of the money can happen. So for deposits, such nominees can be appointed either successfully or simultaneously, while for other purposes such as for locker purposes, they can be appointed successively only. Okay. So, Nirmala Sitharaman has said that specified that for articles kept in the safe custody or lockers only allow successive nominations. Okay, so successive nomination ensures that if the first nominee is unavailable, this next or nominee in line will become operative, maintaining continuity and reducing complications for legal heirs. Okay, so this is the basic idea that for the deposits there can be successive or simultaneous nomination that can happen, but for your lockers or for the safe custody, whatever material you have given for the safe custody, that will be given in the successive nomination only. Now, settlement of unclaimed amounts. So, the State Bank of India Act and the Banking Companies Acquisition and Transfer of Undertakings Act of 1970 and 1980 provide for transferring the unpaid or unclaimed dividend to an unpaid dividend account. So, what happens that, see, an unpaid dividend account is a special bank account that a company must open to hold any dividends that are not paid or claimed within 30 days of being declared. So, companies, they get the profit, right? Companies, they get the profit. From this profit, they have to pay the corporate profit tax. From the profit, they keep the undistributed reserves. So from the profit, the companies keep the undistributed reserves, okay, or the retained earnings, we can say. From the profit, the companies have to give the dividends to the shareholders. Now let's say that the dividend has been declared, but some one or two shareholders, they have not received the dividend, or they are not getting they are not claiming the dividend. So an unpaid dividend account is a special bank account that a company must open to hold any dividends that are not paid or claimed within 30 days of being declared. So what happens that if there are the unpaid dividends or the unclaimed dividends, so that are transferred to the unpaid dividend account by the companies. If the money in the account remains unpaid or unclaimed for 7 years, you know that if the dividend is unclaimed or unpaid for 7 years, it is transferred to the Investor Education and Protection Fund. Okay. So the bill widens. So the bill is proposing to widen the ambit of the funds that can be transferred to the Investor Education and Protection Fund. So these include, before we were only talking about the unpaid or unclaimed dividends. Now the bill widens the ambit of the funds that can be transferred to the Investor Education and Protection Fund to include shares for which dividend has not been paid to or claimed for 7 consecutive years. So the shares now comes under the ambit of the IEPF, as well as any interest or redemption amount for the bonds which is unpaid or unclaimed for 7 years. So now the interest on the bonds or the redemption amount for the bonds also can come under the ambit of IEPF. So this is the idea that before only the unclaimed amounts or unclaimed dividends were coming under the IEPF. Now it is said that the dividends for which shares for which dividend has not been paid or claimed for 7 consecutive years, or any interest or redemption amount for bonds, should also come under the ambit of the IEPF. So if they are unclaimed for 7 years, they should go to the IEPF. Any person whose shares or unclaimed unpaid money is transferred to IEPF can claim the transfer or refund or get the refund. Okay. So this is the idea. So basically, before, the unpaid or unclaimed dividend goes to the unpaid dividend account, and if these are unclaimed for 7 years, they will be transferred to the Investor Education and Protection Fund. Now it has been said that the bill widens the ambit of the funds that can be transferred to the IEPF, that is shares for which dividend has not been claimed for 7 consecutive years, and any interest or redemption amount for the bonds which is unpaid, unclaimed for 7 years. So they can also go under the IEPF as per the proposal, and you can easily claim the transfer or refund from the IEPF whenever you want. Okay, so this is the idea. Now this is it. We have discussed all the updates that has been brought or that has been proposed under the bill. Now the bill has been passed by the Lok Sabha. We will see that what happens further now. But this is the updates that has been proposed. These are the major updates that have been proposed by the bill. Okay. Now, I hope you have understood this. The additional information, just in the newspaper, there was the information that was given that the share of bank deposits in total household savings has come down from 55% to less than 40% in the past decade because of the investments that are happening in the mutual funds, in the stock markets and such. So now even the middle class households and like the people, if they want to save their money, they are saving their money in mutual funds and they are investing their money more. Okay, so the saving with the banks have reduced. So the share of bank deposits in the total household savings have come down from 55% to 40%. So this is also what has been stated. Okay, so this is it for today. I hope you enjoyed the session. I hope you were able to understand the updates that the bill is proposing. Okay, so now this is the first question. I hope you will be able to answer this question. But before moving forward, if you go to edutab.in, you can go to the free material section, you can go to the blog section, and you can read the blogs that have been provided to you. And these blogs provide the exam information, and these blogs, they provide the strategy for the examination, and they also provide the success stories that you can read to get more information for the examination. Okay, so you can go through the blogs to get more of the information regarding the examination. Okay, so this is the idea. Now you can also go through the courses. If you want to see the courses that EduTap is providing, you can also go through the courses that is provided by EduTap, and what all is provided in the courses, that also you can see. Okay, so you can see the courses that are provided, as well as in the free material you can go through the blogs. So in the blog section at the end, you can explore by topics. You can see the blogs for the particular exam that you are preparing for, that is, let's say, RBI Grade B. So you can see for RBI Grade B, and you can get the exam information strategy, and you can read the success stories and such. Okay, so I hope this is clear. Now this is the first question. I hope you will be able to answer this question. Do give me the right answer of this question. And now this is the second question. I hope you will be able to answer this question also. So which of the following statement is or are correct in regards to the nomination, that you have to tell. Okay, so these are the two questions, and this is it for today's session. I hope you enjoyed the session and you understood something from the session. So this is it. Thank you very much for joining, and let's meet in the next session. Thank you everyone. Thank you for joining.